to Iron Financial. This is the place where we forge stronger portfolios by cutting right through the market weakness. Today, we are putting an absolute behemoth under the microscope, Amgen. Now, after their latest financial reports dropped, the one question on everyone's mind is this: is this company an ironclad fortress for your capital? Or is it a rusting giant starting to corrode from the inside out? It's time to find out. Let's dive in and stress test the fundamentals. Okay, let's get right down to business and start with the first massive pillar of this financial fortress. In 2024, Amgen pulled in a record-breaking $33.4 billion in total revenues. Now look, that's not just a little bit of growth. That is a massive 19% surge year over year. In a market like this one, numbers like that, well, they absolutely demand your attention. And this surge was driven by a staggering 23% increase in product volume growth. Now, this is the really important part. What that means is they are physically selling more units of their drugs. They're not just jacking up the prices to make the numbers look good. This is a sign of real-world demand, of real market expansion, not just some financial sleight of hand. And that is the kind of raw, top-line power that forms the bedrock of a really solid investment thesis. Now, what's really interesting here is how they're getting that revenue. This isn't a one-trick pony we're talking about. Amgen has 14, count them, 14 blockbuster products, each one pulling in over $1 billion a year. Just think about that for a second. While some of their competitors are dangerously, and I mean dangerously, reliant on one or two big drugs that are about to hit their patent cliff, Amgen has built this incredibly wide, stable base. So this isn't some single skyscraper that's vulnerable to one single point of failure. No, this is like a fortified city with multiple strongholds. This kind of diversification, it provides a powerful defense against those inevitable patent expirations and market shifts that can and do absolutely cripple less prepared companies. And here it is. For all you long-term investors out there, this is the hard proof. 13 consecutive years of dividend increases. Look, this isn't some vague promise about future returns or some corporate buzzword. This is a track record. It's about delivering cold, hard cash back to shareholders year after year, like absolute clockwork. This demonstrates a really deep-seated, disciplined commitment to shareholder value and a consistent ability to generate massive amounts of free cash flow. We're talking over $10 billion in 2024 alone. It shows you have a management team that's not just focused on some flashy headline growth number. They're focused on rewarding the people who actually own a piece of the company. This is exactly the kind of financial discipline we look for. Whoa, hold on a minute. Those are some impressive headline numbers. I will absolutely give you that. But here at Iron Financial, we don't just admire the shiny exterior. We have to ask the tough questions. You see this fortress, but is it really built on solid rock? Or are we just looking at a beautiful facade that's been built on shifting sand? Big numbers can hide big problems. My job is to find the cracks in the armor, and with a company this big, there are always a few things that keep me up at night. Are we seeing a company at its absolute peak, or is this really a sustainable foundation for future growth? Let's find out. That's a fair challenge, a very fair challenge. So let's do just that. Let's deconstruct the architecture of this success. We're going to drill down deep into what I call the blockbuster blueprint and really look at the engineering behind these numbers. I'm going to show you that this isn't just a facade. The load-bearing structures here are solid, and I believe they're built for the long haul. So let's start by examining the specific products that are doing all the heavy lifting right now. Just look at this table. This right here is the engine room of Amgen's growth. We are not talking about slow, mature products limping along. We are seeing explosive growth in key critical areas. Repatha, their cholesterol drug for high-risk patients, grew an incredible 36% last year, smashing right through that $3 billion sales mark. Evenity, for osteoporosis, is up 34% as it gains serious traction globally. And Tezspire, for severe asthma, is absolutely rocketing up 52%. That is massive, massive uptake. And then there's Blincito, a crucial immuno-oncology drug, up 28%. These are not just tiny incremental gains. They are market-leading growth rates. These are the powerful, load-bearing pillars that are driving the entire structure forward, and they all have significant momentum heading into the future. And the strength is distributed. It's not all coming from one place. This chart brilliantly illustrates that Amgen isn't just leaning on one single pillar. Their rare disease portfolio, which they beefed up with that huge Horizon acquisition, is already a $5 billion plus business. The oncology portfolio, well, it remains an absolute powerhouse, growing at a steady 11%. And their biosimilar segment, which I think a lot of people underestimate, is a $3 billion business in its own right, providing durable cash flow and fighting back against the very same competition that threatens their legacy drugs. You see? This is a multi-pronged strategy that provides stability and multiple avenues for growth. It's smart. And hey, this isn't just my analysis. Don't just take my word for it. Listen to the man in the driver's seat, the CEO, Robert Broadway. He said, Amgen delivered strong performance in 2025. With double-digit growth, we enter 2026 with momentum. That is a confident statement from a management team that sees a very clear path forward. They are executing a disciplined strategy, and the results, well, they're speaking for themselves. When the leadership has this level of conviction and it's backed up by the numbers we're seeing, that's a powerful signal to the market. So here's the crucial point. At the end of the day, it all comes down to cash. In 2025, Amgen generated a massive $8.1 billion in free cash flow. This is the financial oxygen for the company. This is what fuels those dividend increases we just talked about. It's what allows them to pay down their debt, which they did to the tune of $6 billion in 2025. And most importantly, it's what funds the next generation of blockbuster drugs. So this isn't just some number on a page. It's the engine that powers the entire enterprise, and it's the war chest they are absolutely going to need to fight the battles we are about to discuss. All right, the bull case is laid out. It's impressive, I'll admit it. But every iron structure, no matter how strong it looks, it has to be stress tested. So now it's my turn. I'm going to apply some pressure and see if we can find the cracks in this armor. Because no matter how strong a company looks on the surface, believe me, there are always vulnerabilities. It's time to stress test this foundation and see if it can really withstand the pressure that I know is coming. Let's start with the most obvious and unavoidable threat, competition. This is a relentless, non-stop assault. The wolves are at the door, and they come in the form of biosimilars, which you can just think of them as near-identical, approved copies of their biologic drugs that can be sold at a much lower price, and of course generics. They are chipping away at key franchises. Look at Prolia and Xgeva, two major drugs for bone health. Amgen is explicitly warning investors about sales erosion from new biosimilar launches right here in the US. And Otezla, another key product for psoriasis, is facing the exact same threat from generics over in Europe starting in 2026. This isn't some potential problem in the distant future. It is happening right now. And for an investor, that means margin compression and a long, hard fight just to maintain market share. This is a significant crack in the foundation. Okay, let's move on, because this is where the case for caution really starts to build. The second major stress point is regulation. The entire landscape has fundamentally changed. The Inflation Reduction Act, or IRA, gives the US government the power to effectively set drug prices for Medicare. And this isn't a negotiation between equals, it's a mandate. And guess what? Amgen is directly in the crosshairs. Two of their massive drugs, Enbrel and Otezla, have already been selected for these price negotiations. This is a systematic structural headwinds that is going to erode their profitability across the portfolio for years to come. The government is now a key player, maybe the key player in their pricing strategy, and that is a risk you absolutely cannot ignore. Now let's talk about execution. Amgen made a huge, multi-billion-dollar bet with the Horizon acquisition. But integrating a company of that scale is incredibly complex. I mean, Amgen's own 10K filing reveals they've inherited over 30 new contract manufacturers. That's a logistical nightmare just waiting to happen. And get this, the single source manufacturer for Krystexxa, a key rare disease drug from that very acquisition, is located in Israel. Now, in the current geopolitical climate, that is a massive supply chain risk concentrated in one of the most volatile regions in the entire world. If they can't manage this complexity and navigate these global risks, that big, shiny acquisition could turn into a very expensive, value-destroying mistake. And this right here, this brings me to the quality of their earnings. On the screen, you see two different sets of numbers for their 2025 earnings per share guidance. On the right, you've got the non-GAAP number. It looks fantastic, right? Over $20 per share. That's the number that most analysts on the street are going to focus on. But now, look at the left side, the GAAP number. That's the one that follows generally accepted accounting principles, is nearly half of that. So why the huge gap? Well, it's stuffed with acquisition-related expenses and a bunch of other adjustments. It just makes you question how much of that shiny non-GAAP earnings number is real, sustainable profit, and how much is just accounting maneuvers designed to make the story look a little bit better. For me, that's a major red flag. And finally, let's talk about the debt. To fund that big Horizon acquisition and fuel its growth, Amgen has taken on a literal mountain of debt. This chart really puts it into perspective. Their total debt stood at a staggering $54.6 billion at the end of 2025. That is significantly more than their entire projected revenue for the year. This much leverage, it puts immense pressure on the company. Remember that $8.1 billion in free cash flow he was so excited about? Well, a huge chunk of that now has to go towards servicing this debt before a single penny can get to shareholders or into R&D. It limits their flexibility, and it magnifies every single other risk we've just talked about. So the question is, have they taken on too much weight to fuel this growth? That's the multi-billion-dollar question, isn't it? You've pointed out some serious stress fractures, and I'll be the first to admit, those risks are real. But you're looking at the past and the present. Great companies, the ones that last, are defined by how they build the future. Amgen isn't just sitting back and letting its armor rust. It is in the forge right now, actively hammering out the next generation of blockbuster drugs. So let's talk about the R&D gamble, because that right there is where the future of this company will ultimately be decided. This number says it all. $7.2 billion. That's what they invested in research and development in 2025 alone. That's a 22% increase year over year. This is not a company that's just milking its old assets and coasting into retirement. No, this is a bold, aggressive investment in innovation. They are pouring billions and billions of dollars into the laboratory to build a sustainable growth engine for the next decade. In the pharma world, you either innovate or you die. And this is the kind of commitment to innovation that separates the winners from the losers. And this massive investment is already bearing fruit. Let's look at the pipeline highlights. They're advancing MariTide, their obesity drug, with 6 massive global phase 3 studies. This is their shot at one of the biggest markets in the history of pharmaceuticals, a market potentially worth hundreds of billions of dollars. They also secured 5 new FDA approvals in 2025 alone. They delivered landmark data for Repithot that could expand its use dramatically. And they're even building their own biosimilars to attack competitors like Opdivo and Keytruda. These are the steel beams being put in place that will support this company's structure for years and years to come. A gamble is still a gamble, and I want to counter all that optimism with a dose of cold, hard reality, and I'm going to take it straight from Amgen's own legal filings. Quote, "We may not be able to develop commercial products despite significant investments in R&D. That's not me saying it, that is Amgen warning its own investors in the fine print. Drug development is brutally uncertain. The vast majority of projects fail. You can spend billions on a promising drug like MariTide, and it can fail in phase 3, leaving you with absolutely nothing. That $7.2 billion isn't a guaranteed return. It's a high-stakes bet at the casino table." And while we're on the subject, let's look at their own forecast for 2026. After posting that huge 19% growth in 2024, they're guiding for revenues somewhere between $37 and $38.4 billion in 2026. So let's do the math. At the midpoint, that's roughly 8 to 9% growth over their 2025 full-year guidance. Now, it's still growth, sure, but is that double-digit engine starting to sputter? Is this a sign of a maturing company where the massive growth spurts are becoming a thing of the past? It certainly suggests that the headwinds we discussed, the competition, the regulation, are starting to have a real, quantifiable impact on their forward trajectory. Okay, we've laid out the bull case. We've laid out the bear case. We've examined the architecture, and we have stress-tested the foundation from every angle. So now it is time to weigh all the evidence and forge our final verdict. For you, the investor watching this, is Amgen an opportunity to build real wealth, or is it a value trap just waiting to spring? The bull case is really built on undeniable strength. This is a diversified financial fortress with $14 billion blockbusters. It's generating a powerful river of free cash flow that directly rewards shareholders through dividends and buybacks. And they are not standing still. They are aggressively reinvesting that cash to forge the next generation of life-saving drugs. The bulls see a durable, market-leading company that's built to last and to reward those who hold on for the long term. The bear case, however, paints a very, very different picture. It sees a giant facing powerful headwinds from every direction. It sees a mature company whose key products are under a relentless assault from biosimilar competition, a company whose profitability is being systematically threatened by government price controls. It sees significant operational risks from a highly complex acquisition and a balance sheet that is weighed down by a massive debt load. The bears see a potential value trap, a company whose best growth days may already be behind it. So there you have it, the bull case and the bear case. The final question, that's for you to decide. Is Amgen's portfolio truly ironclad, or are the cracks that we found today going to widen under all that pressure? Is it strong enough to weather the inevitable storms of competition and regulation that are gathering right now on the horizon? The answer to that question will determine where the stock goes from here. Thanks for joining us on Iron Financial. Now go forge your portfolio.